If you've been dreaming about owning a brand new pickup truck but couldn't stomach the $80,000 price tag, well, buckle up because something absolutely wild is happening right now in the truck market. Brand new trucks, yes, I'm talking about the Ford F-150s, Chevy Silverados, and Ram 1500s, are now selling for $20,000 to $30,000 less than MSRP. Dealers are practically begging buyers to take them off the lot. The kind of deals we're seeing today haven't happened in over a decade. You can literally walk into a dealership and find a 2024 truck cheaper than a used 2022 model with 30,000 miles. It's the kind of price collapse nobody in the auto industry saw coming, and it's rewriting everything we thought we knew about truck values. So what caused this sudden meltdown? It all started with interest rates. Over the last 2 years, financing a new vehicle has become painfully expensive. A few years ago, you could get a low-interest auto loan at 2% or 3%. Now, you're staring down the barrel of 8%, even 9% on a 7-year loan. That alone priced millions of potential buyers out of the market. Then you have the pandemic factor. Manufacturers went all in on truck production during the demand boom of 2021 and 2022, when everyone wanted a new vehicle. But that demand wasn't sustainable. Dealers got greedy, adding 5-figure markups. Automakers overproduced, and now lots are overflowing with unsold inventory that just isn't moving. Add to that a wave of confusion around EV trucks, like the Ford Lightning and Silverado EV, which left buyers hesitant to commit to gas-powered models. It's a perfect storm that froze the market solid. Dealers are now in panic mode. We're talking record-breaking incentives, giant cash rebates, and 0% financing offers that feel like a blast from the past. Truck lots across the country are overflowing with unsold 2023 and even 2022 inventory. Some dealers are so desperate they're calling customers who walked away weeks ago, offering massive last-minute discounts just to make a sale. Even fleet buyers, who usually pay near wholesale prices, are now negotiating unheard-of bulk discounts. There's a real sense of fear behind the scenes. Sales teams know if they don't move this metal fast, they'll be sitting on millions of dollars in unsold trucks by winter. But here's where it gets even more shocking. The used truck market is crashing too, and it's falling even faster than new. Trucks that were worth $70,000 just a year ago are suddenly worth $50,000, sometimes even less. Owners are waking up to find their trucks have lost $20,000 in value in under 12 months. Repossessions are on the rise as owners can't keep up with inflated payments on trucks now worth far less than what they owe. Banks, seeing the trend, are tightening lending standards, making it even harder for buyers to finance these depreciating beasts. The domino effect is brutal. Used car dealers are struggling, auction prices are collapsing, and the resale market that used to hold strong for pickups is completely unraveling. Meanwhile, the automakers themselves are in full-blown damage control. Ford, GM, and Ram are scrambling to balance production with a demand drop they never anticipated. They're offering dealers huge factory incentives and cash bonuses just to move inventory. Ford has already cut production at several plants. GM went even further, pausing truck production at key facilities to stop the financial bleeding. The entire pricing strategy of the modern pickup is under review. Automakers built their profits on luxury $80,000 trucks loaded with every feature imaginable, but that business model is suddenly collapsing. The EV transition, uncertain consumer confidence, and sky-high interest rates have forced the big three to rethink everything, and all of this has a ripple effect across the entire US economy. Truck sales are a cornerstone of American auto manufacturing. When the truck market stalls, it hits suppliers, factory workers, finance companies, and even regional economies built around auto production. Used car dealers are watching their inventory values sink overnight. Leasing companies are seeing losses as trucks coming off lease are worth far less than projected. Lenders are bracing for a wave of defaults. Economists are warning this could be the early stage of a much bigger auto market crash if confidence doesn't return soon. Yet, amid all this chaos, there are some clear winners and losers. Smart buyers who waited out the madness of 2022 are now swooping in and scoring $20,000, $30,000 discounts on brand new trucks, essentially getting a luxury pickup for the price of a mid-range SUV. But the losers? They're the people who bought at the peak when prices were inflated beyond reason. Many of them are now underwater on their loans, owing far more than their trucks are worth. Trade-ins that were once gold are now worth pennies on the dollar, leaving owners stuck or forced to eat the loss. The big question now is, what's next for the future of pickup trucks? Will automakers finally abandon these luxury $80,000 models and return to building affordable, practical work trucks again? Or will they double down on electrification, betting that hybrid and EV pickups are the way out of this mess? Some analysts predict a full market correction by 2026, with smaller, more efficient trucks dominating the lineup. Others think we're only halfway through the shakeup and that several brands might not survive the next few years if sales keep collapsing at this pace. And then there's the social media backlash. TikTok, YouTube, and Instagram are full of viral videos showing truck lots packed with unsold vehicles. Rows and rows of brand new Silverados, Rams, and F-150s just sitting there collecting dust. Truck owners are flooding comment sections, furious over how quickly their resale values have tanked. Memes are spreading, calling it the pickup truck bubble burst. And for once, it's not an exaggeration. What was once the ultimate American status symbol, the big, shiny new truck, is now the poster child for one of the biggest market corrections we've seen in modern automotive history. And it's not slowing down, because now we're seeing the ripple effects spread beyond just pickup trucks. The same forces crushing truck prices are starting to bleed into SUVs and luxury vehicles, where similar overproduction and inflated prices during the pandemic years are leading to the same result, a flood of unsold models and plummeting resale values. But trucks, being the backbone of American vehicle sales, are the most exposed. What's happening in this segment is a warning sign for the entire auto industry. Dealers that once couldn't keep trucks on the lot are now resorting to unprecedented tactics to get attention. Some are throwing in free extended warranties, thousands in accessories, or even lifetime maintenance just to close deals. Others are advertising below invoice pricing, a phrase we haven't heard seriously in years. There are even reports of dealerships losing money on truck sales just to hit manufacturer volume bonuses. That's how desperate it's become. In a market that was once dominated by profit-rich markups, we've flipped to a survival game. The days of paying over sticker are gone. Now it's all about who can unload inventory fastest before the next shipment arrives. And speaking of shipments, the supply chain hangover from the pandemic is still wreaking havoc. Automakers ordered parts and built production schedules assuming 2022 level demand would continue indefinitely. But when buyers slammed the brakes, those orders didn't just stop overnight. It takes months, sometimes even a year, for automakers to slow the pipeline. So even as sales dip, trucks keep rolling off assembly lines, filling up dealer lots to the brim. You can drive past some of the biggest dealerships in the country right now and see acres of shiny new trucks just sitting there waiting for buyers that aren't showing up. For consumers though, this meltdown might actually be the best news in years. Those who were priced out of the truck market during the insanity of 2021-2023 are now stepping in. People who couldn't touch an F-150 Lariat or a Silverado High Country without a $90K loan are now seeing those trucks advertised for mid-$50K or even less after incentives. In some regions, 0% APR is back and trade-in bonuses are through the roof. It's a complete reversal of power. Buyers finally have the leverage again, but even that has its limits, because banks are growing cautious. They've seen what's happening to resale values, and they don't want to be stuck with repossessed trucks that are losing thousands in value each month. And that's another part of this story, the wave of repossessions quietly building in the background. During the boom, many buyers stretched their finances thin to grab those premium trims, sometimes locking in 7 or 8 year loans just to make the payments work. But with rising interest rates, insurance hikes, and fuel costs, a lot of those owners are now struggling to keep up. Repossession companies are busier than ever. Some auction houses are flooded with late model trucks that banks are trying to offload, further dragging down prices. It's a vicious cycle. Lower resale values make lenders pull back, which makes financing harder, which pushes demand down even further. Meanwhile, inside Detroit's corporate boardrooms, there's panic mixed with confusion. Ford, GM, and Stellantis are realizing that the high-margin luxury truck strategy that made them billions might not be sustainable. For years, they've pushed trims like the King Ranch, Denali, and Longhorn, trucks with massaging seats and giant touchscreens priced like European luxury cars. But when buyers can't afford the payments and those trucks lose value faster than a sports car, the entire business model comes under question. There are whispers that automakers may soon pivot back to simpler, more affordable models, trucks that that focus on utility over luxury. Some analysts even predict a resurgence of smaller pickups like the Ford Maverick and the Chevy Colorado, which are cheaper to build, easier to sell, and less vulnerable to interest rate swings. On the EV front, the confusion is even greater. The Ford Lightning, once hailed as the future of trucks, has seen sales slow dramatically. Buyers are hesitant, concerned about range, towing capacity, and charging infrastructure. The Silverado EV and Ram 1500 REV are facing similar uncertainty. Many consumers aren't ready to make the jump, especially in rural areas where gas trucks dominate. That hesitation has left automakers straddling two worlds, producing both electric and gasoline trucks, neither of which are selling at the pace they need to be profitable. It's a balancing act that's costing them millions each quarter, and Wall Street is starting to notice. And as the financial pressure builds, job cuts and production slowdowns are quietly starting to spread. Some plants have gone to reduce shifts. Temporary workers are being laid off. Parts suppliers are scaling back orders. The truck market collapse isn't just a consumer story, it's an economic one. Every unsold truck sitting on a lot represents thousands of hours of labor, from factory workers to transport drivers to dealership staff. If this downturn deepens, we could see ripple effects across entire regions that depend on auto manufacturing. Meanwhile, social media continues to pour gasoline on the fire. TikTok and YouTube are flooded with videos of massive truck lots stretching to the horizon, influencers joking that you could buy 2 trucks for the price of one used Tesla. On Reddit, truck owners are sharing screenshots of their trade-in offers, shocked to find that vehicles they bought 18 months ago for $78K are now worth barely $52Ks. The outrage is real, and it's spreading fast. Hashtags like truck market crash and pickup bubble are trending as frustrated owners vent about how the trucks they thought were investments have turned into financial sinkholes. But here's the thing, this meltdown might just be the correction the market desperately needed. For years, pickup prices spiraled out of control, detached from reality. Average working Americans, the core truck buyers, were priced out. Now, as painful as it is for owners and dealers, this reset could finally bring trucks back to where they belong. Accessible, practical, and built for work, not just luxury. If history repeats itself, this downturn could pave the way for the next generation of affordable, innovative pickups. And that's where things get really interesting, because the next wave of trucks might not look anything like what we're used to. Industry insiders are already hinting that the pickup of the future will be smaller, lighter, and far more efficient. Not the giant chrome-covered beasts that dominated the 2010s. We're talking turbocharged hybrids, plug-in models, and even modular electric trucks that can swap battery packs or double as mobile power stations. Ford's already experimenting with smaller hybrid powertrains for the F-150 lineup, and Toyota's success with the new Tacoma hybrid is making waves in Detroit boardrooms. Automakers are starting to realize that the future of trucks isn't just about brute power, it's about balance, efficiency, and affordability, and the numbers are telling the same story. According to internal dealer data leaking online, base model trucks are starting to outsell premium trims for the first time in years. That means buyers are choosing function over flash. Contractors, small business owners, and everyday drivers are gravitating back to simple configurations without the $10,000 leather interior upgrade. It's a massive shift in buyer behavior, and it's forcing automakers to rethink what customers really want. Even luxury-focused trims are being reconsidered. Manufacturers are quietly phasing out some high-end packages that no longer justify their price tags. The market is speaking loud and clear. The era of the $90K pickup might finally be ending, and while that's bad news for dealers who built their profits on upselling loaded trucks, it's a glimmer of hope for regular buyers. There's a growing sense that we're entering a new era of affordability, one where the average working American might actually be able to buy a new truck again without needing an 8-year loan. It's ironic, isn't it? After years of runaway prices and record profits, the system is finally correcting itself, and in the process, it's rediscovering what made trucks popular in the first place: simplicity, durability, and practicality. Still, the transition won't be smooth. Many dealerships are struggling to adapt. Their entire business model was built around financing and markups on premium models. Now that those trucks are sitting unsold, dealers have to pivot fast, offering more entry-level trims, cutting profit margins, and even revamping how they advertise. The flashy, luxury truck lifestyle marketing campaigns are losing their punch, replaced by a renewed focus on value, reliability, and ownership cost. You're seeing ads again that talk about towing power, fuel economy, and work capability, quality, not just panoramic sunroofs and massaging seats. Meanwhile, the financial institutions that fuel the auto market are tightening their grip. Lenders burned by falling truck values are demanding bigger down payments, shorter loan terms, and higher credit scores. That's locking out some buyers entirely, even as prices fall. Others are finding that while sticker prices are dropping, monthly payments aren't always following suit because of those stubbornly high interest rates. So while the deals look incredible on paper, the financing landscape is still creating hurdles, and that's slowing the recovery even more. But one group is quietly thriving in all this chaos: the savvy buyers who waited. These are the people who refused to pay inflated pandemic prices, who drove their older trucks a little longer and kept their cash ready. They're now scooping up brand new 2024 models with thousands in discounts, rebates, and low interest offers. Some are walking away with top tier trucks for nearly half what they would have paid 2 years ago. It's almost like a reward for patience, a once in a generation buying opportunity that flips the power dynamic between customers and car dealers. And yet, behind the optimism, there's a darker undercurrent. Owners who bought during the pandemic are now realizing just how badly they were burned. Some are discovering that they owe $15,000 more on their loans than their trucks are worth. Others are trying to trade in and getting offers so low it feels insulting. Forums are full of stories from people who financed high-end trims at peak prices and are now stuck making massive payments on trucks that have lost value faster than they can pay them down. It's a harsh reminder of how fragile the modern auto market has become, where even the most popular best-selling vehicles in America aren't immune to a financial correction, and all the while, EV trucks hang over the entire situation like a storm cloud. Automakers are pushing them as the next big thing, but adoption is slower than expected. Many buyers love the idea of electric torque and instant power, but they're hesitant about range limits, charging access, and cold weather performance. Rural buyers, who make up a huge portion of the truck market, are especially cautious. As a result, the very trucks that were supposed to lead the industry into the future are now adding confusion instead of clarity. Production targets are being revised, prices are being slashed, and the once bold EV rollout timelines are quietly being pushed back. That uncertainty is creating what some analysts are calling a truck identity crisis. Automakers don't know which direction to lean: stick with gas, double down on electric, or split the difference with hybrids. Each path carries massive costs and risks. Meanwhile, buyers are standing on the sidelines waiting for clarity, and that wait is strangling sales even further. It's a rare moment in automotive history where nobody, from manufacturers to dealers to consumers, seems to know exactly what the next move should be. But one thing's for sure: the industry is being forced to adapt faster than ever before. Every automaker is rethinking their next generation lineup, trying to strike a balance between technology, affordability, and demand. And as we move deeper into this correction, the biggest question looming over everyone's head is, how far will the truck market fall before it finally stabilizes? That's the million-dollar question echoing across every dealership floor and executive office right now. Some experts say we're nearing the bottom, that prices will level off in the next few months as dealers clear out old inventory and production slows. But others warn this might just be the beginning. If consumer confidence continues to slide, if loan defaults keep rising, and if EV confusion drags on, then this meltdown could turn into a full-blown market collapse that reshapes the entire automotive landscape for years to come. And the signs are already there. Manufacturers are quietly pulling back their lofty forecasts. Some are scaling down production targets for 2025 models. Others are canceling planned trim levels or shelving unreleased luxury editions entirely. Even the massive advertising budgets that once flooded airwaves with truck commercials every 5 minutes are shrinking. Ford and GM are both focusing more on digital marketing and social media engagement because traditional sales channels just aren't converting the way they used to. Dealers are being told to brace for a longer recovery window. That's corporate speak for things aren't getting better anytime soon. But it's not just about economics, it's cultural too. Trucks have always symbolized freedom, power, and success in American life. For decades, they weren't just vehicles, they were status symbols. Yet right now, that image is shifting. More and more buyers are questioning the logic of owning an $80,000 truck that guzzles gas and depreciates faster than a smartphone. You can see it in online communities. People are proud to downsize, to trade in their oversized trucks for smaller, more practical models. What used to be seen as settling is now being rebranded as smart, financially savvy living. It's a cultural shift that could permanently change the image of the American pickup. up. Meanwhile, rural and urban buyers are reacting differently to the chaos. In rural areas, trucks are still essential tools, but even there, people are tightening budgets. Contractors and farmers who once bought new every few years are now keeping their trucks longer, repairing instead of replacing. In cities, the luxury truck craze has cooled almost overnight. People who bought big trucks for the lifestyle factor are dumping them in favor of compact SUVs or hybrids that make more financial sense. The result is a sudden and massive drop in demand from both ends of the market, a rare double hit that even industry veterans didn't see coming. At the same time, leasing companies and rental fleets are quietly panicking. The trucks they purchased at inflated prices during the pandemic are now worth tens of thousands less than expected. That's creating massive write-downs on their balance sheets. Some are even delaying fleet refreshes because the resale losses are too severe to absorb all at once. It's a ripple effect that's now extending to corporate logistics, ride-sharing companies, and even government fleets that rely heavily on pickups. Everyone's feeling the pressure, and while all this unfolds, Wall Street is watching closely. Auto stocks, especially those tied heavily to truck sales, are under scrutiny. Analysts are questioning whether Ford and GM can sustain their profit margins in a post-luxury truck world. Investors are demanding cost cuts, more disciplined production, and clearer EV strategies. The old formula of build expensive trucks, rake in cash isn't working anymore. The financial backbone of America's biggest automakers is shifting beneath their feet, and how they respond now could determine who survives the next decade.